We have a financial system that is a volcano waiting to erupt, and it is inevitable that it will erupt and will obliterate life as we know it. And it is only a question of when. And so I don't know if it happens in 5 years, 50 years, 100 years. Can't imagine it's more than 50, but I think it's going to be cataclysmic. Am I barking up the right tree?
No.
All right, here we go. Tell me about it. So where do you think we are right now?
The world blew up in 2008. The world is now entirely about the management of the debts. That is everything now. And there are two ways for that to happen. If we didn't do quantitative easing in 2008, 9, 10, 11, all of that stuff, the world would have burnt and destroyed in the manner that you thought, which is like the Argentina collapse, the Cyprus collapse, this huge destruction. What we chose was a glide path. Glide
to where? Because my thinking is you glide until you crash. It's a slower crash for sure.
Well, the crash is ongoing, but you're buying time for GDP growth to come back. Right. Our problem is if you're in debt and you don't have enough income, i.e. your income's not growing enough to service your debts, you get into a problem. So what we've been doing is monetizing those interest payments on the debt, which is basically using a credit card to pay off your credit card, or using a credit card to pay off your mortgage. Okay, that's not sustainable. But what you're hoping is that eventually your income goes up. And there are ways to do that. And the big issue here is demographics.
Let me ask you a very pointed question before we move on. When was the last time real wages went up?
They haven't really risen since about 1972, 1974.
And this is why I think the glide path is going to be gnarly. So I don't want to skip ahead too much because we are definitely not ready for this part of the conversation, but I'm very curious. Is it increased productivity born of the exponential technologies that are happening? Is that what you think is
that is the
thing?
Only option we have?
Okay. And right now I want people to hear dun, 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 like playing in the background, because whoo, I think that will, that is going to create the world's gnarliest 20-year period. And so agreed, we get on the other side of this. Hey, I'm super optimistic 20 years from now. I am just real worried about the next 20 years. Okay, so planting that terrifying seed for people. Now, if you don't mind, walk us through. So we know what your punchline is. We're gliding, and it's buying us enough time that we can get to a new lily pad. That lily pad is exponential technology that increases productivity and addresses real wage increase for the first time since 1972. But I want people to hear that 1972 was a long time ago. So we haven't been able to do it yet, even with the internet.
Yeah, that was the death of the American dream that happened. The American dream was you participate in the US economy, you get richer. The reality is it didn't happen. And I'll come back to why, because this is a really important story, because everybody has a thesis on who's to blame, what's to blame, how it happened. Who's to blame is probably, as an Englishman, the French. It's actually all about the Treaty of Versailles. It's actually the Germans who are to blame for all of this. So after World War I, everybody was so pissed what happened with Germany and the war that the US, the UK, and the French got together and said, we want Germany to pay war repatriations, i.e. that would make good for the devastation of Europe. Germany couldn't pay it. So they eventually hyperinflated their economy, and the rise of populism, which was Hitler's Germany.
Hyperinflation is going to be so important in this discussion.
Yeah.
I think it's worth taking a second to explain why hyperinflation is a go-to strategy, one that we're using right now by my estimation, What is hyperinflation? How does it happen? Why is it a go-to strategy?
Hyperinflation is when you issue more money to pay your debts, and it comes in an endless cycle because you're not generating GDP growth, so you just keep printing money. So an excess of anything, in extremis, everything becomes worthless. So if you're thirsty and you've come out of the desert and somebody gives you a bottle of water, you'll pay pretty much anything for it. If somebody's there with 1 million bottles of water, what's a bottle worth to you? Almost nothing. Once you've had the first one, right? So anything in excess supply, it's just supply and demand. Too much supply of currency, the value goes down. So what happened in Germany is they had these gigantic, impossible to pay debts to the West. So they printed as much money as possible. That blew up spectacularly. Prices rose millions of %.
And really fast, I want to use a different word for people, and a shout out to Robert Breedlove for introducing this idea to me. If you change one word from print to counterfeit, people understand what's actually happening. And so if you think of printing money as government approved counterfeiting, then it's like, oh, because I think people have an intuitive understanding for why counterfeiting is bad, but I certainly didn't have an intuitive understanding for why government printing is bad, which shame on me. But once I realized, oh yes, this is literally the equivalent of a guy at home with a printing press just making more money.
That's right. But so let's carry on with the story. So the Germans destroyed their economy. The people got angry.
Because the only way to pay their debt was to make up fake money. Fake, it's not really fake, but they make it up so they can pay it.
And every time you got paid as a German citizen, that fistful of notes barely bought you a loaf of bread one day and half a loaf of bread the next day, and then nothing at all until you have wheelbarrows full of cash. And we've seen this in Argentina. We've seen it in Venezuela. We've seen it in plenty of countries. We just saw it in Lebanon recently as well. That's a total collapse of the value of a currency. Okay, so therefore, all of your productivity as a human is devalued as well because you can't buy anything. So you end up having to ignore currency and barter. And we've seen that in many places as well, because the value exchange of a currency in the middle, because it falls so fast in value, it's a nightmare to deal with. And it's a total destruction of wealth, except those who own assets. And that's an important point we'll come to much later. So Germany goes to war again. End of World War II. Everybody's like, okay, we're done with this now.
Out of curiosity, how well do you know the story of Hitler's rise? How does he restabilize the economy?
He starts building roads. He starts rebuilding Germany and making them proud in Germany, nationalism.
But how does he pay them? Like, if their money's worthless, how does he get them?
I think they'd already reset the currency after that. So he didn't rise out of the currency collapse. He rose post the currency collapse. So
got it.
You've now got the new currency. I can't remember if it was the Reichsmark, whichever one it was at the time. So, or the Deutschmark. So anyway, so Hitler comes. So World War II, peace in our time. And humans celebrate in the way the humans do. They all had sex and had babies because they felt like there was security. And what we got, and this is the most important point of the story, what we got was the largest population bulge the world has ever seen. They're called the baby boomers. The baby boomers were all doing the same thing at the same time because there's a massive group of them. 76 million of them were born in the United States alone, but we had it across Europe. We had it everywhere. That cohort was what caused the 1970s inflation, because a bunch of 20 to 30-year-olds go into the workforce at the same time. And this is the important point. I'll come on to this workforce point. They come into the workforce at the same time and they all buy their first house, their first car, their first suit, their first tie, their first everything. They all get married. They all have kids all at the same time. Right. So that's a competition for resources that was unparalleled. The rate of change of demand increase was massive. And that was the 70s inflation. I don't think it's a monetary phenomena. I think it's a demographic phenomena. And I spent a long time talking about that. Demand driven, which is why it was so impossible to deal with, While right now it's not demand-driven inflation, it was supply issues. Okay. But those baby boomers, remember, went into the workforce at the same time. So I'm an employer. I have a factory in America. And suddenly I've got 76 million people I can choose from to give a job to. Of course, I'm not going to pay them more money. Why should I? I don't have to, because they're all looking for a job. So there's too many people. Remember, excess supply means falling in prices. Excess supply of people, wages don't go up. So this is a function of demographics. It's not a function of the man. It's not a function of somebody doing something bad. It's the problem of people shagging in celebration for the end of World War II. That is the actual issue.
Quick question. Is that moment of the flood of the boomers coming in, is that a good moment for the greatest generation, their parents, who are basically now the owners of the factories by the time that they come into the workforce? And it's like, hey, I don't have to pay more money. And P.S., the price at which I can sell the things that I'm making is going up because there's so many people buying it. That moment feels like it would be good for someone.
Yes, because labor cost is low versus a booming economy, which is what we had. So we had labor costs not going up, so margins for corporation goes up, but we had inflation that ate into it. But then the 80s onwards, it's been a one-way street. So that competition for wages actually gets worse, because by the mid-80s, the computer's now in the workforce, and it's everywhere. The PC, the mainframe, everything. So now you've got something that can do jobs. So what happens is wages don't go up. And then 1996, we have the World Trade Organization Agreement and NAFTA, the North American Free Trade Agreement. So now you're bringing in other workers who are paid less to compete against US workers.
There was a guy that warned against this, right? Like
James Goldsmith.
Walk me through that. This was very interesting.
So he in 1996, in 1996 was a free trade person. I was like, of course, everybody should trade free. And I think they should. But he said, you have to do it on the right terms, because you'll totally destroy society, because everybody will undertake labor arbitrage. And that means all of the capital and the labor all accrues to China, Vietnam, and other places. So these Chinese workers were the cost input for goods in the West. So goods fell in value. We had kind of deflation, disinflation, etc. But what happened was US workers didn't have jobs, and you could never raise their wages, because if you try and raise your wage, you're just going to offshore and get it from India or China or somewhere else. But James Goldsmith's point was, yes, it will benefit the Chinese economy, but the Chinese worker probably won't benefit to the same order of magnitude, because a lot of these economies are kleptocracies. So somebody's going to take the money. So there'll be a bunch of super rich who'll make all of the money in those countries, and the business owners in the West will make all of the money, and the worker will get destroyed. And he said this is going to lead to populism, anger, and this is not the right answer. His idea was the right answer, and there's a Charlie Rose interview I urge everybody to watch. Charlie Rose, James Goldsmith, the guy's terrifyingly intense and terrifyingly smart, incredible interview. So his idea was, don't allow labor to be the arbitrage, allow a US company to go and manufacture goods in China for Chinese market, but don't export those goods, because that's going to create this problem. And he was absolutely right. Everybody thought he was an idiot, and he's a true capitalist. James Goldsmith's a ultimate capitalist, and everyone's like, well, this guy's being, some sort of trade protectionist. He's crazy, but he was right. But then, so the WTO, and then China eventually enters in 2000. So we've got no chance for wages to go up. And now we've just added the next leg of the equation, which is AI and robotics. The wages are never going to go up. They're never going to stay up. So what has happened is that has meant
on that. So as a CEO, that doesn't feel true to me, but to channel your boy, William Goldsmith,
James Goldsmith.
James, thank you. What it feels like is happening right now is that you have so many workers refusing to work that even though there are a lot of people that are of that age that theoretically you would expect to be flooding the market, you have so many people going out and we're printing so much money that they can afford to do that. You've got so many government subsidies, whatever, that now people willing to work become a scarce resource, even though there are technically a lot of workers. So I am paying more for sure now than I was even 2 or 3 years ago. Now, what that comes out at a population level, I don't know, but I saw somebody ask this poll on Twitter or in I think it was actually at an event that my wife was speaking at. Anyway, they asked like, who here has had to pay more for high caliber talent in the last couple of years? And massive number of people raised their hand. And I was like, oh my God, yes. Like I didn't even think about it sort of beyond myself. I wasn't thinking about it as a trend, but that really feels true. Does that ring true to you? Or once you even it across the population, you're like, no?
Firstly, you're confusing real and nominal. Real wages have not gone up versus prices.
Okay. Meaning
so prices rose more than wages. So if you look at peak, I don't know what peak wages were, but let's say they were 6% last year, year-on-year wage growth, but peak prices were 9%. So people actually got poorer, which is why we've got a recession going on, because everybody lost purchasing power versus just basic goods.
So would you say we are in a recession already?
Yes. Yeah, by every indicator I've got, we're in a recession already. And it will become more abundantly clear. The other thing I think is a point that's also important is we need to think about total aggregate demand within an economy. And who are you giving those increased wages to, right? So yes, you are paying more for scarce labor, certain skill sets, expertise, whatever. But when the labor force participation rate is only 65%, you have to average that over 65% of the economy, not 100%. And that's the function of demographics. So there's a whole bunch of people who are retired who wages can't go up, which is retirees, which is basically that 35% is that bucket plus people who've opted out. So you actually reduce it by that. And the labor force participation rate is actually a function of the birth deaths rate forward lagged 30 years. So what we know is we know in the future that there's going to be less and less people in the workforce, which is interesting. And it actually mirrors inflation, GDP growth, everything's driven by this monumental demographic issue. So yes, you're paying up for wages, but your margins have gone down anyway because the other costs of input. So real wages for everybody have actually gone negative, massively negative, which is why everybody's feeling the pinch. That's the issue we've got, and that demographics does not go away. We know that because we can look at the birth deaths rate today, and we can figure out what the population is going to be like in 50 years' time, 70 years' time, 20 years' time, all of this. The only difference of changing that is immigration. So why this is important is it's something I call the magic formula. Magic formula is economic growth. Economic growth is driven by 3 factors and 3 factors only at long-term level, aside from just the normal business cycle ups and downs. Population growth. The more population you have, the more your economy has activity. So population growth, well, population shrinking the entire Western world. The only way of offsetting that is immigration. But we talked about the fact that the workers are angry, they can't get wage rises. There is less of a desire to have immigration than there was maybe 20 years ago. So most countries have started to restrict immigration. Fine. So there's no way of solving the population side. The next part of the magic formula is productivity. That's how much output each of us can generate for the economy, and that becomes more efficient. Problem is, it seems to be a function of demographics too, and productivity has been declining since the 70s. Well, actually since the 50s. So productivity is going down. The population is shrinking over time, So the answer was debt. The answer all the way through this equation from these people who were sold the American dream back in the 1950s, the baby boomers, they're listening to Elvis Presley, getting into the Beatles. They're like, let's go, the American dream, I'm going to get rich. But as we pointed out, their wages never went up. But because there were so many of these people, they competed for houses, and houses went up. They invested in the stock market went up. Everything, all assets got more expensive because of their demand. So they did the rational thing, which is, I'm just going to borrow money. And the difference between the rise of the assets and their wages is essentially what the debt was. The debt side of the equation is what the government's done too, because GDP is declining. The trend rate of GDP keeps going down.
What's up, guys? It's Tom Bilyeu, and if you're anything like me, you're always looking for ways to level up your mindset, your business, and your life in general. That's exactly why I started Impact Theory, a podcast that brings together the world's most successful and inspiring people to share their stories and, most importantly, strategies for success. And now it's easier than ever to listen to Impact Theory on Amazon Music. Whether you're on the go or chilling at home, you can simply open up the Amazon Music app and search for Impact Theory with Tom Bilyeu to start listening right away. If you really want to take things to the next level, just ask Alexa. Hey Alexa, play Impact Theory with Tom Bilyeu on Amazon Music.
Now playing Impact Theory with Tom Bilyeu on Amazon Music.
And boom, you're instantly plugged into the latest and greatest conversations on mindset, health, finances, and entrepreneurship. Get inspired, get motivated, and be legendary with Impact Theory on Amazon Music. Let's do this. One question that I don't quite understand is, why is debt taken into account when we factor GDP? Is it because we're essentially bringing new money online when we make those loans?
Essentially, yes. You're leveraging your ability to consume stuff or invest in stuff. Now, at an economic level, you might argue, well, you're taking it from one person for another, but there's interest payments. There's a whole bunch of mechanisms. But really, if you see the Chinese economy, and what happened is they did the same. They had population coming in, productivity probably rising, but then they massively borrowed money. So they had the fastest growing economy in the world for a long period of time. Leverage gives the illusion of growth, but obviously it has a payback later. And this is the payback we've got now. The leverage that the baby boomers took on, their governments took on, and the corporations took on for all of this issue is what we're dealing with now. So wages didn't go up, assets went up because they were competing for them. Like you're competing for scarce resources of people right now. But when you put 76 million people in, the housing market goes up. The stock market goes up because they start pension plans and stuff like that. So the difference is debt. And that was okay. Although we were all starting to look at this saying, whoa, this is now getting absurdly debt laden. The government's 100% of debt. The private sector's 100% of debt. Households are 100% of GDP in debt. It's like, whoa, this is out of control. Then 2008 comes along. And that is the debt crisis. I mean, every fucking bank blew up. I mean, everything blew up. It was a complete, total collapse. And that rolled on into Europe in 2012 when the governments, Spain, Italy, etc., blew up. And all the banks in Europe blew up.
I think this is where you and I begin to diverge. So when I look at 2008, it feels like we just kicked the can. And the thing that I'm worried about is that you can only kick the can for so long. And at some point, you're going to run out of ability to glide and you do hit the ground. And
well, let's go through this because this is an important point. My view is 2008 was the uncovering that the geyser is not a geyser, it's a volcano. They see it and it's like the holy shit moment. So they did something unparalleled. The Great Reset happened. They reset all interest rates to zero. I had not realized this until recently. That was the debt jubilee. We will reset all payments to zero because we understand. And then Europe kind of forced the car, 2012. It was then okay. There's no way around this. So the blow up happens, but it's now disguised. And the disguise is the important next part of the story. Because what they did is somewhere around 2012, I believe, G7 made the agreement, learnt from the Japanese, which is...
G7 are the 7 biggest
nations in the
banks?
World. 7 nations in the world.
Okay. Nothing to do with their central banks at this point. No,
but it's the finance ministers who get together. But there's a realization, and I think the Japanese realized it first. When your government debt is 100% of GDP, this is the really important point of the Everything Code. When your government debt is 100% of GDP, and your private sector debt is, for easy maths, call it 100% of GDP in debt. Okay, now interest rates, let's say they're 2% for easy numbers. So when the government has to pay, well, economic growth is what pays for debt, right? It's the earnings of the economy. So if economic growth is growing at 2% and interest rates are at 2%, then the government, which is 100% of GDP in debt, uses all economic growth to pay the interest. So then the private sector has got to pay its 2%. And that means the economy would contract, and this would continue in perpetuity. So they look at this
before we move on to the Everything Code, because I want to go through that in detail. I want to recap how we've got here and what here is. So here is effectively, we have this constant looping cycle of debt where we have these boom and bust periods because we are masking that a blow up happened in 2008, which was this devastating moment where we realized, okay, the whole system is very fragile because people are disguising the fact that real wages are not going up by taking on more and more debt, both at the individual level and at the governmental level. We've also weakened because of the demographic boom. We go into this globalization moment where we are driving the cost of goods down by doing labor arbitrage, and very well predicted that what's going to end up happening is you will begin creating a schism where the rich are getting richer and the poor are getting poorer, because the quote unquote poor or middle, what used to be the middle class, they are the workers. They're building your cars, your widgets, your whatever. But if you use the labor arbitrage and you send that to a foreign country where labor is cheaper, yay, the people that own assets are very excited because the companies that are overseas, the asset is they own a piece of that company, just to be very clear. And so the people that own the assets in these companies that are using labor arbitrage to drive the cost of their goods down, to drive their revenues up, they're loving life. But all the people that used to go to the factory, they're either stagnant, down, or headed towards, the deaths of despair route where people are just doing drugs. If anybody wants to understand the opioid epidemic in the US, that's going to be a big part of it. Yep. I mean, this is why this is necessary before we can talk about the Everything Code. So, okay. So that we're in that world where everybody is disguising the problem through debt, but eventually you're going to hit a come to Jesus moment where you just can't keep going up. We had a massive bubble in the housing market that pops, boom, like a series of things, series of dominoes fall. Now, the reason that I say this is where you and I begin to diverge in terms of where we're predicting what goes on in the future is a stat that you'll know better than I, but the number of banks that it took to wipe out, I forget how many billions of dollars in value, was like 500 or something during the 2008 collapse. What we've just gone through with the collapse of 4 banks, we had even more value wiped out. So we have this consolidation of all these, what used to be, back in the 1920s, when 1929 happened, it was like 5,000 banks or more had to collapse before we wiped out as much value as we've wiped out recently in the banking crisis, with, again, 4 banks wiping out not quite as much value as were wiped out in the Great Depression, but it's distressingly close. So 5,000 banks, now it only takes 4 banks to wipe out the same amount of value. And so it's like, I just feel the system is getting more fragile. It's not like we're just going horizontal. We're getting more fragile with every passing day, every time this boom and bust cycle happens. And again, we're papering over this simply by making money out of nowhere. And I really want people to understand that we are making money out of nowhere.
So we'll come on to the outcomes in a bit. What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency, which is the...
When you say mutualizing, you mean making it everybody's problem?
Yes. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise. Because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay, we all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what the fuck? What was the point of buying the stocks if the value of my assets aren't going up? But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the value of your collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough. This is what most people can't get their heads around.
Well, so I'm going to...
But we will get, slightly... but we'll play out the future a bit, because there are ways where it could go even more wrong than this ongoing mutualization amongst the people of the costs.
It can go even more wrong.
Well, this is wrong because it's insidious. You don't see it, you don't notice it, you just sense it, right? That's what's going on. But it could lead to another outcome, and the other outcome could be a total loss of control of the financial system. I don't think that is going to be the case, but okay, there's a possibility.
Yes. And so this is getting into, I have a growing thesis that is, it's beginning to touch everything. I need to find a word for this, but the level of awareness of a problem when it is ubiquitous, you would think that's good because it kills the arbitrage where only the people who are aware of it are able to take advantage of it. And that sounds bad and it sounds evil. But as everyone becomes aware of it, the only outcome that I see from that is cynicism. And I come at it from an entertainment perspective, which may seem very weird for people, but I grew up in the 80s, which I actually want to talk about the 80s and why the 80s felt so awesome living through it, because I think it actually planted a seed for something problematic. But anyway, so the 80s from a film perspective was awesome. You could have a movie where Arnold Schwarzenegger throws a knife and it goes through a guy and it pins him to the wood beam behind him and he says, "Stick around." And it isn't, you're actually laughing in the moment. You're not laughing at how many times you've heard a line said like that, or, oh my God, that's like an Arnie line. It was the first time you'd ever heard or seen anything like that. And it was just legitimately funny. And over time, though, we become aware of all these patterns to the point where if you grew up watching movies and you grew up in a world where 80s movies were a thing and they've been mimicked so many times and done to death, everything happens with a wink. And once everything happens with a wink, everybody lives in this ironic world where being more cynical than the next person, memeing something faster than the next person becomes the thing. And so one of the things, and I feel a moral obligation to get the information out about what the world of finance really is as fast as I can. And yet I know that as everybody becomes aware of the trick won't work anymore. So I'm in this weird spot of like wanting to tell people, hey, when they print money, quantitative easing, they are counterfeiting money. It is destroying your buying power. But it is the only way that we glide. So it's like,
no, but you're keeping the monkeys happy by lowering the cost of TV sets and other stuff, right? That's the other weird thing. Consumable goods are cheap.
Yes. Now we're really getting in, because now that we have to talk about metaverse and how if you want to pacify people, that's a totally different thing.
No, but we have pacified them with cheap TVs, cheap beer, cheap food, cheap everything.
But they're still derailing, man. They are still derailing.
Because the asset, which is your future self, it's your future consumption, has gone up so much that nobody can afford them. So you've kept them happy with dopamine and sugar hits of crap.
You've kept them numb. I won't say you've kept them happy. You've kept them numb.
Okay. Yeah. Happy is the wrong word, but you're right. But look, I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing death of economic vibrancy or a spectacular blow up, the answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there, and you can participate with $1 or $1 billion. It's an
okay. We're gonna get to crypto, system. But we have to get to your everything code. I think this is crazy important. So I went in and listened. I must have listened to it. Oh God, you're gonna think I'm kidding. 30 times to write it down verbatim. You delivered. I had never heard you do it so succinctly. And so I wrote it down verbatim. And what I want to do is I'm going to go through your everything code, but we're going to stop in a couple key areas to make sure that people really understand this. So I'm going to read a section and then give you a chance to, if you think there's something that you can say even more concisely or whatever, but you just delivered this so well. So here it goes. So Raoul has a theory that everything is related to one phenomena. And once you understand it, things get a lot easier to predict. So here we go. It's a quote from Raoul. What I had suddenly stumbled across in the everything code was the fact that the global central banks had probably agreed together sometime around 2012 after Europe blew up that with governments at 100% of GDP in debt, they were going to crowd out all of the private sector and we were going to just keep having financial crises. Okay, so you mentioned earlier this idea of 100% debt, 100% of GDP in debt. So I don't think we have to go over that again. But the part in this section that I don't understand is this concept of the government competing with private sector. So
this is the bit we talked about, right? So the economy grows at 2%. The government needs that to pay its interest because it's 2%.
How does it use that to pay its interest?
Well, basically it comes
because they're just taking more in taxes.
Exactly, right. There's a level of economic growth that needs to service the interest payments. But if everybody's interest payments are too high, the answer is firstly to have the interest rate as low as possible, which is why the Japanese have a much lower natural rate of interest than everybody else, because they're 260% of GDP in debt. But their companies are less in debt.
So they've trapped themselves. They have so much debt they can't let the interest rate rise.
Nobody can. This is why we're going to have a recession and we're going to cut rates back down to zero. It's impossible to work. So this is the thing, is once all of these governments hit 100%, then you either blow up the private sector, the banking sector, corporates, or the government sector. You choose.
How?
Because there's not enough income to service that level of debt, because GDP growth keeps declining.
Okay, so let me see if I understand this. So when you say private sector, you mean private banking?
No, I mean all private sector, households. So how does the average person service the interest? It's again from economic activity, the activity that they have. So the same with corporations, and the banking system is involved intricately within that whole system. So economic activity is what pays the interest. If you don't have a job, you can't service your mortgage or your credit card, right? Fact. And if your debt growth keeps going up, you need to keep your wages going up to pay your debts. That's the GDP side of the equation. But what we're finding is that all debt that is in excess of GDP at government level is ending up on the balance sheet 3.5 years later.
Okay, how?
Quantitative easing. And I did the maths on this, and I think I was the first person to really figure, I don't think anybody's really figured this out yet. I went and looked at this, and I realized that what they were monetizing was the interest payments on the debt 3.5 years later. Okay, why 3.5 years? In 2008, all interest rates went to zero. Every government refinanced itself at zero. And most of the debt for all governments is in the 3 to 5 year sector. So somewhere between 3 to 5 years, 3.5, 4 years. And what happens is every time you service the debt, you need to get the interest rates back down again. You end up having a recession. You get this very cyclical phenomena.
Because are they deferring the need to pay for 3 to 5 years?
Nobody pays back debt. Nobody. Nobody is paying back any debt anywhere. So what they're doing is every time it comes to pay to service the next amount of debt, it ends up on the Fed balance sheet. Now, it actually happens because there's an economic slowdown driven by the debt, but that's what happens. And there is a marginal difference in the size. This is true of the US, the UK, the EU, Japan. They're all the same. And the difference of the balance sheets is slightly bigger. And the difference is every time there's a direct financial crisis, they have to put direct money in. So we've already just seen a little bit of that in the US.
Okay, Europe, so the difference would be buying the federal bank, buying assets versus just stimmy checks? Is that what you mean by direct money?
So stimmy checks, that's coming in onto the bank balance sheet because that is government debt that will end up getting monetized 3.5 years later, which happens to be end of this year into next year, which is why I think we've got a lot of quantitative easing coming, because we've got to monetize all of the bloody interest payments from the pandemic.
And when we say monetize, we mean print money.
Print money and put it on the Fed balance sheet. Just print money. Expand the balance sheet of the Federal Reserve.
To match what is owed, we will create money.
Correct. And that's using a credit card to pay off your other credit card, essentially, right? Printing
now, is that
money.
What you mean by nobody is servicing debt? Is just everybody's printing more money?
Correct.
Because surely they are actually paying the debt
payments. No debt is getting paid off. You're just rolling the interest payment. So it keeps getting bigger every year.
Hold on. If we owe China money, there's no way China's just like, oh, word, it's all good, push it off. So surely we are, at a minimum, printing money in order to pay those government debts. Right?
But when that comes up after 4 years, you just issue new debt.
But you issue new debt to yourself so that you can then pay off whoever you owe money to. Surely.
No, because the government is borrowing the money here, right? So what they just pay off, they don't pay off the debt, they just do it again. So it's like your mortgage comes up at the end, and imagine you just had interest payments. You just roll it again and say, oh, I'm just going to pay interest for another 30 years. Nobody ever pays off the actual loan. And nobody cares as long as you get the interest, which is weird. Now, if you pay off the loan, you optically do it, but you issue a new one again. So it's like, I'm going to pay off my credit card with my brand new credit card I've got. And so look, I've got rid of my Capital One credit card.
Yeah, that's what I'm saying is when they're printing the money, they are paying off the debt. They're just creating new debt in the equal amount or more, but they are technically paying that debt off. Otherwise, I can't fathom how anybody would do it.
So debt is growing in all of these countries at GDP plus the interest payments. And that interest payment component is going on the balance sheet. And that's happening everywhere, including Japan. So they're all doing exactly the same thing, which is interesting. That doesn't happen by accident. There is an understanding that the world is too much in debt and there's no way of dealing this without us all going back into caveman times. So this is the answer.
Yeah, and so I think this is where we have to look at Ray Dalio's thesis. And I think this is what has really painted my thinking. So Ray is just like, look backwards, last 500 years of history. Every time you've gotten to this point where you're gliding, it always ends with either economic war or actual hot weaponry war. And you need this level of trauma so that people will finally go, fine, everything that I owed, I'm just going to let go of it. Whatever. It is what it is. I just want peace. And so you get this complete upending of everything. We reset, we go back to zero, but we do it in the most grueling, brutal, sacrificial way possible. And I hear this a lot from people like, this all rebalanced in 100 years. Sure, but that is cold comfort to millennials who could never buy a house, right?
So, yes, but this is where the fourth turning comes to me, right? I think we are at economic warfare. Everybody needs an enemy. So we've decided that China, Russia, whoever we want to be our enemy is our enemy. So we are economic warfare for the share of the pie. But the world is not, it's not actually a fixed pie. There's an abundance. And that abundance is the other economic warfare, which is technology. Right? That's happening at a massive scale. And it's going into space. It's going everywhere. So we've got physical kind of warfare, economic warfare over technology, which is what Taiwan is all about. You know, they own the secret code, which is the ability to produce computer chips in ways that nobody else can replicate. So there's that. And then we are at war with each other as the population is split and wants to blame each other for what has happened, when in fact it was actually the baby boomers that actually caused the problem in the first place. The people caused the problems of the people.
In fairness, it was the greatest generation that had all the sex that gave birth to the baby boomers that created the problem. And this is where it gets tricky, because God bless the greatest generation for fighting the wars, et cetera, et cetera. Okay, before we keep going down that road, because I want to keep this all in the construct of your everything code, because this was very enlightening. Okay, so you just walked us through that first part about why we're going to keep having these financial crises, and the only way out of that is to print money, basically. Okay, next section. And the only way, here we go. And the only way of solving this is putting it on the central bank balance sheet, because there's not enough GDP to pay the interest. This is what you were just talking about. So if you think about GDP growth, let's call it 2%, and let's assume that interest rates are 2%, which is roughly where they've been since 2008. So if the government is 100% GDP in debt and GDP grows at 2%, but interest payments are also at 2%, that's all of GDP growth just to pay the interest on the US government debt. But the private sector, excluding the financial sector, so households and corporations, are another 120% of GDP in debt. Well, that will give you negative growth every year of 2%, and it just compounds. So what happens is those interest payments go to the Fed balance sheet and they monetize it. Again, this is what we were just talking about. So then the private sector is not competing with the government, and that was provable across all major economies. It's like they all decided that they're too far in debt, and the only way to solve this is quantitative easing. And then I started thinking, well, if I know this to be true, and I know that the central bank balance sheets are 97% correlated with the asset prices, well, all I need to do is use forward-looking indicators to predict the central bank balance sheets and/or interest payments. Dude, talk to me about this 97% correlated with assets. That seems like having a crystal ball.
So it doesn't. It actually reflects today. So you could basically, as I explained before, the thing that's actually driving the S&P 500 is the Fed balance sheet. It's not companies getting more valuable. When you say
driving, you mean driving the price.
Correct. So it's an optical illusion. It's a money illusion.
So the price simply rises to meet the level of inflation caused by printing money.
Correct. You're readjusting the price. So that is what's going on. And so then when you understand that, and it's 97%, you understand that nothing matters apart from this liquidity, which is what I've been trying to tell people, is sorry, all your economic models are wrong. Yes, you need to forecast the business cycle to know where you are in the probability of printing money cycle, but that's all that matters, and it drives assets. And that's why people right now are getting very angry because the stock market's going up and they're like, yeah, but don't you know there's a recession? Yeah, I know that the answer to a recession is more cowbell, printing of more money, which is why I explain to people.
This is what I'm talking about with as people become aware of these issues, as you zoom out and you see the gigantic crater, you begin to realize, oh, we're in a recession. That means they're going to print money. So in a recession, prices are going up and people are like, yeah, I know where this goes. So that's crazy. And that it'll be very interesting to see what the knock-on effects are of the everybody becoming aware of these patterns. And I've heard you say that it's almost always the path of most pain is the path that ends up actually happening. And so as we begin to predict, oh, this is what's going to happen, the fact that we can predict will have some very sort of painful consequences.
The important point being here is I know what drives liquidity. It's driven by the business cycle. And there are certain cycles that are forward-looking. The Chinese credit cycle happens to lead by about 18 months or 2 years.
For people that don't know what the business cycle is, can you give a quick primer?
The business cycle is the ebb and flow in economic activity that occurs, and that's a boom and bust, a recession, expansion.
Is it caused by interest rates?
We don't really know what causes the business cycle. It's caused partly by interest rates. It's caused by excess production, excess inventories, too limited inventories. There's many things that can drive a business cycle, but it's observable and has been observable for millennia. And one of the things we do is when the business cycle is too hot and inflation starts rising, central banks tend to raise interest rates. That tends to bring down economic activity. I think even without a central bank, interest rates would rise naturally because I think the free market can set interest rates without a central bank. And then the economy slows down again and we see this endless cycle. So what I think my hypothesis is that, okay, this is very observable. I think it's going to last, this relationship between assets and the central bank balance sheet because of the mechanism of debasement of currency. And I can forecast out what the business cycle looks like. And I also know the amount of interest payments that need to be made because they happened 3.5 years ago. And I can see how far the balance sheet's going to expand. So the balance sheet right now is what, $6.5 trillion. And it looks like it will get $7 trillion or so. And it looks like it will get to $12 to $14 trillion by the end of 2025. So that puts, and there's a number of other ways I've proven this out in this whole thing. And I'll send you the whole piece myself. I've not really gone public with all of the whole thing of how it works, but in the end, that puts asset prices massively higher than here, hugely higher. So we're looking at more than a doubling of the NASDAQ from here. Ooh. We're looking at another gigantic crypto run. That's into 2025. So we're seeing huge moves that just come from the debasement. And I've gone through in the Everything Code article that I wrote for Global Macro Investor, which is my kind of premium research service. In that, I've gone through various ways of proving this all out. So that's what I think I can do. But your observation, I think, is really important. Okay, when people, I mean, I've sent this to quite a few people, and obviously the subscribers of Global Macro Investor are kind of the world's most famous hedge fund managers, asset managers. And I think it really shocked people and resonated with people. They're like, oh my God, everything makes sense now. And so once you see it, it all makes sense. Now, as it becomes more public as a thesis, and Mike Howell at Cross Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively because people starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up. I think that's what we'll see. We'll be more like the crypto cycle, which is pretty much what we've just seen as well. We had a big collapse last year, and now we're straight back into the boom as we're starting to forecast this.
All right. So let me see if I'm tracking all of this.
Sorry, there is a lot in this.
No, man, there is. But the more I go over this stuff, the more times I encounter it, the more I'm really beginning to piece together what's happening. It is, though, leading me to a level of distress. It does not make me calm. And it's leading me to a level of distress. While I agree with you, when you start looking beyond the next 20 years, it evens back out and we hopefully get the exponential age and that works out. But I think there's such a period of tumult that...
No. Yes. Okay. Let's get down to an individual level. Let's not get to societal level. I can unfuck your future, which is the series that we ran on Real Vision, by simply offering you the right asset. You get caught in this trap. If you own crypto or technology, you will outperform this entire thing. Now, if you're not wealthy enough to buy, set up a brokerage account doing that because it's complicated for you, you can do it with crypto for no money. And you'll participate not only in the trend of debasement, so you're not getting left behind, because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet. So there's your solve at a personal level.
All right.
Societal level.
Before we can get into that, I think we have to track why. Let's recap why you get this, the stock market rising and falling with the printing of money. So you've covered that very well, but just by quick recap, as you pump money into the system, then the cost of the assets are necessarily going to rise because they are a scarce asset. And as there's more money available, those prices are going to rise. They're going to rise in proportion. And so you can just watch them rise and lower together. Now, the reason why, And I'll say Bitcoin maybe instead of crypto, just because there's a lot of things going on in crypto that get a little dodgy. And so I'll focus, I don't think Bitcoin, I'm not a Bitcoin maximalist by any stretch of the imagination, but
no, but Bitcoin's a clear way of describing this.
Correct. So when you look at Bitcoin, the reason, and you were the first person to show me a chart that basically shows the price of Bitcoin goes up as money is pumped into the system. And it's interesting that it tracks in the same way that the stock market tracks, but for the exact opposite reason. So the reason that the price of Bitcoin is going to go up is people are like, yo, I need to be somewhere where I can't have my value debased through the creation of additional, right? So printing of money. So when you print money, buying power goes down because prices rise in commensurate with the amount of money going into the system. So you feel like you're getting richer, but you're not. It's an illusion. God, I love that you use that word. Okay, so people then pour into Bitcoin because they're like, there will only ever be 22 million. That's just it. And so since I know that that's it, that it is a finite cap, it will never go more, then you can't debase it through the printing of additional Bitcoin. Okay, so people flood into that and you see it rise. And so that was the first time, because I was like, people were speculating, what is Bitcoin? What does its price respond to? And once you pointed out it responds to the M2 global money supply, I was like, okay, that makes a lot of sense. So walk people through then how to play that game well. Why technology? That we haven't addressed yet. So why technology? And how do you do Bitcoin well? Is it a buy and hold? Are you trading? What does that look like?
So if with Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall and interest rates are going up. So your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, you know, the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend.
Okay, this guaranteed people do not know the difference.
So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the NASDAQ does. Most technologies do. And the reason why the NASDAQ keeps outperforming the S&P and keeps outperforming value stocks and makes people so angry is because it's all about the adoption of new technology. If you think about what's been driving the NASDAQ recently, it's the adoption of AI. Obviously, that's the fastest adoption of any technology in history. Crypto was the fastest beforehand, but this has eclipsed it. It's gone from, in 6 months, from basically 0 users to 100 million users in 6 months. We've never seen anything like it.
I want to put an interpretation of what you just said forward and tell me if this is accurate, because I thought your punchline was going to be the reason that technology outperforms the illusion of prices going up is because it's an increase in productivity per capita. But what I hear you saying with Metcalfe's law is it's actually outperforming because of what I will call, you're going to hate this word, but hype. That basically the people are pouring into it. They're so excited about, oh my God.
That's not what Metcalfe's law is.
I know what Metcalfe's law is, but I'm saying if you really think about why Metcalfe's law would drive value that exceeds the illusion, that is the only thing I can take away from that. Because if it isn't increasing productivity per capita, why would it otherwise outstrip?
No, it is. And we'll come on to that in a sec. But Metcalfe's law is the number of nodes on a network, i.e. number of users of crypto, versus the number of applications in the interconnection. So the more we build out a Web3 world, the more that's the multiplier as opposed to the people. Initially, it's the people who use it. So like Doge has no use case apart from memes, memetics, but it has a bunch of users. Bitcoin has limited use, but a huge amount of users as well. But the use case is very clear, which is the scarcity of the asset and the purity of the asset and the security of the network. Ethereum has lots of uses, DeFi, NFTs, all of this stuff, and a whole load of users. So this is what's driving these things. Why are we adopting the technology? That's the productivity equation. The financial system becomes more productive and safer and securer by using cryptocurrency rails. We become superpowers as humans by adopting AI, robotics. We become more productive and ability to do stuff by adopting EV technology. All of this stuff is actually driving productivity. Now, here's another.
So I need to push back on that. So I don't think the value created in Web3, speaking as somebody is as in Web3 as a human can be. I've put just a gazillion of my own dollars into this. It's right now, it is all people betting that this is going to be the future versus it actually being the future right now. So that's why I say
that's how you make money, my friend. The
moment
it is,
I'm not
casting, it is, right, is the moment, the investment. There are use cases. So let's just get out of the NFT noise and everything else. I'm having dinner with a friend of mine. He used to run the trading operations of one of the largest banks in Australia. And it's a big bank, the equivalent of Bank of America. And he's like, he's just retired. And he's like, I've been heavily involved in crypto at the bank doing stuff. I'm like, what are you guys doing? He goes, we've issued 5 stable coins. I'm like, why? Why do you need the stable coins? Why not use Tether or USDC or whatever? He's like, okay, so this is what people don't understand, why crypto is so important for the financial system. He said, we're in Australia. We have a gigantic pension system. Our pension system buys a gigantic amount of US equities. The US is about to go to settlement. So when you buy a share and you have to pay for it from T+2 or T+3, So that's trade date plus 3 days to pay for the bill to T+1. Okay, that seems fine. Foreign exchange transactions are T+2. They can't settle the US stocks that they buy. So they either have to leave massive amounts of money with a broker that they've dealt with who could go bust or uses the money ineffectively, or they create a stable coin for instant settlement. So they can, and they've built that. This one is on top of Ethereum. Okay, fine. But that is a multi-$100 billion use case for why crypto is very powerful for increasing productivity within the financial system alone. And there's many of these all over the place. So why is Tether such a big, useful stablecoin? You've basically fractionalized the US dollar and now a person in the Philippines who works in a rice field to receive a payment from his cousin who's living in New York City instantaneously without any cost in dollars, which is the currency that they all want. That's mind-blowing. That's why the stablecoin system alone is so gigantic. So I don't agree with there is no productivity or killer app. The killer app of crypto so far has actually been stablecoins. And that
well, so I want to make sure what I'm saying is very nuanced, but I don't think I'm being clear enough yet. So what I'm saying is that Metcalfe's law, if the reason that tech has outperformed is because of Metcalfe's law, which remember, I was surprised to hear you say that. I didn't think that's what you were going to say. I thought you were going to say productivity, but you said Metcalfe's law. If that's true, and I'm just trying to understand what the reality is, and you're saying this is how you make money, hey, I'm with you. I'm just trying to understand what this is without fancy concepts, just like the down home nitty gritty. So Metcalfe's law is, as far as I can tell, that is the point at which it is hype. It's people getting excited. Now, they may be hype for good reasons. They may be hype because they're right about where productivity is coming from. But well, then let me ask it this way. For those just listening, he's shaking his head. Is there a difference between Metcalfe's law and productivity? Or to you, are they one and the same?
No, they're two entirely different concepts. Metcalfe's law is the value of a network and how to value it. And the value...
Those are two very different statements. Is it the value of the network, or is it how you value its future utility?
Every vote that goes into a market, i.e. every time price moves, is a vote about current expectations and future expectations. So it's difficult to parse out what that means. But I've provably shown that I can distill Metcalfe's law pretty simply in cryptocurrency to two things. Number of active users. Okay, that makes sense. That's the nodes.
Mm-hmm.
And then the value of the economic activity. And all I did was the dollar value that gets exchanged every month or week. Those two numbers multiplied out gives this crazy, ridiculously large number. But that, when you put it on a graph, is exactly the same as price. And so it's remarkable because price is not in that equation. So
does Metcalfe's law take in the math that you were just saying, the value of the transactions on the network?
It's basically no Metcalfe's law. Nobody knows how to fully measure a Metcalfe's law value system, so you need to approximate it because it's quite a complex mathematical formula, and you're dealing with imperfect worlds where you can't put it in. But anyway, that's nothing to do with the productivity. People are flocking to the technology because it increases whether it's your productivity or solves other solutions for you.
So I'm going to say that slightly differently, and this is where I'm surprised. It's very possible I'm missing something. You were so much more thoughtful on this stuff than I am currently, but what I'm about to say still seems true to me. And that is that Metcalfe's law is the observable response to when people believe something is going to be amazing. So take ETH. People believe that building on Ethereum is going to be the future. I'm one of them. I believe it to the core of my existence, but it hasn't yielded that yet.
No, that's not right. every mobile phone network is priced in Metcalfe's law. All networks are priced at Metcalfe's law. But
why can't they be?
I don't think it matters, Tom. I think you're getting caught in a thing that doesn't really matter. What matters to the bigger equation? There's two things that matter with this whole thing is, does Bitcoin protect you from this issue of debasement, the mutualization of losses amongst everybody? Yes. Okay, fine. Nothing else matters there. Could it form part of what I call the exponential age of technologies, which could eventually increase productivity? Yes. Now, they're not mutually exclusive. There's no, Metcalfe's law is just a measurement of the value of a network. But this productivity idea is the big one. And the productivity idea is, if we can't keep increasing the debt. Remember, the magic formula was population growth or productivity growth plus debt growth. We can't change the population. The debt growth's got too far. So we've got this one thing in the middle. It's the only thing that can change this entire equation. So what we can do is try and grow that. Okay, now let's step back and say, okay, what's happening to the world that's a really big change that happened that the central banks are looking like they're going to print money to do? And that's the green revolution. And it's being driven by Europe, but it's being driven elsewhere. So yes, climate change, yes, all of the benefits of doing this, but there is a magic outcome. So productivity, let's say we use AI, we can do more stuff. And you and I have talked about this in the past, right? We can expand now human knowledge in ways we couldn't do before. And factory lines and agricultural machinery just basically created more productivity per human. Okay, fine. But the big equation in this is the inflation-adjusted price of oil, which let's call that the kind of best benchmark for energy input costs, have been $40 in inflation-adjusted terms for 70 years, 60 years. So we've got a fixed thing here, which is, can we put more output per calorie or kilojoule of energy? That is what productivity is all about. So technology keeps rising, and that's great, keeps going. But all of these governments are focused on the other part of this equation, which is, can I lower the cost of energy? Because if you drop the cost of energy from $40 per barrel of oil equivalent to 10, you 4x productivity. And there is your solution. And that is why they're pouring trillions of dollars into this. And we're seeing what's known as Wright's law, sorry, all these terms, which is the increase in output of a new technology has a commensurate measurable decrease in the cost. And we're seeing that with all of the green energy. So it's just getting cheaper and cheaper and cheaper and cheaper. Now, we can't scale it enough yet, but we know that there's nuclear, there's going to be part of this equation. There's a bunch of things, but over time, we will move away from that $40 fossil fuel anchor and move to $10. So think of the multiplier, because technology is doing this and the cost is doing that. That is what the productivity miracle that is coming.
You can reboot your life, your health, even your career, anything you want. All you need is discipline. I can teach you the tactics that I learned while growing a billion-dollar business that will allow you to see your goals through. Whether you want better health, stronger relationships, a more successful career, any of that is possible with the mindset and business programs in Impact Theory University. Join the thousands of students who have already accomplished amazing things. Tap now for a free trial and get started today. So help me understand, why didn't the internet, which still to me feels like a productivity miracle, why didn't that change all of this? Why isn't it already the lily pad that you believe the exponential age is going to be?
So I think because it replaced jobs.
You don't
I
think
think
AI is going to replace jobs?
yes, I do. But I think the productivity trend is a function of demographics as well. And I don't fully understand why the internet didn't do that, but it also hold out manufacturing jobs. So there was a balance on aggregate what happened within the economy. So I'm thinking it's on aggregate, it wasn't enough to offset these mega trends that we talked about that were driven by the demographics and the debt and the globalization. So I'm thinking it's that. And so we have to have an accelerant because technology growth is not enough to offset demographic issues. And that's what I'm thinking it probably is. You know, we did create, the trend rate of GDP has been falling. So whatever we've done with technology and the same number of people roughly, we don't seem to have pushed up GDP growth.
Let me ask a really ugly question. Hearing everything you're saying, it seems like, I know it's not, but I'm not yet sure why not. Why isn't the baby boom generation dying off and population contracting deflationary in a good way?
It is.
Well then, tell me more. I thought, so population collapse, my gut instinct is that it's terrible. What's the benefit?
The benefit is more stuff for you and I. Our per capita GDP goes up. And it's observable in Japan. It's observable in Switzerland. So GDP per capita goes up. And that helps offset some of these. Now, the problem is per capita is a nice economic term, but right now it accrues to mega giant companies. So it's a way of redistributing that capital amongst the people, which is important, which is why, I believe in things like Web3 technologies, because it allows more people to participate in ways that they couldn't participate in before. Because if not, Google captured it all and Apple capture it all. So I think there's a probability that as the population shrinks, it creates a slowdown in growth because of the magic formula. But if you can increase that productivity element, then we will be richer per capita. Now, there's a government problem of how you distribute that. You need to tax corporations more than they're being taxed. These giant corporations that pay no tax. Most people with an average business pays tax up to here. But Google pays, I don't know what their marginal rate of tax is, 5%. That's wrong. And Amazon, because they're benefiting from the holding out of the American worker in the technology boom, and the people aren't, which is what's making people angry. Now, they're not doing it because they're bad people. It's just the set of cards they've been dealt with. It's been incredibly attractive to be, a super large company, particularly one with a growing industry like technology. So I think net, you can orchestrate it that per capita GDP rises, but you have to think about that issue of does it accrue to the people or not?
What happens if the population is declining, but productivity doesn't go up?
Well, then we just go, trend rate of economic growth just keeps falling.
And so the reason I always assumed that the reason that population falling was a problem is there are fewer people that want to buy your goods. And that's why it hollows out the sort of GDP core economic engine. But as I think about it, it would also, it's interesting, it's going to create a weird sort of feedback collision, but it would increase wages. So if there are fewer people for companies to hire, that's great for the employees' wages. But if there are fewer companies because there's no one to sell anything to, now we have a problem.
Bad assumption. And this is, I can see the IMF got into this whole mess as well. And everyone now says inflation's going up as population dies out. Bad assumption, because technology is in the business of replacing costs. And they will just find ways to employ less people. I mean, again, you and I have talked about this, is like 10 years ago, video editors and sound people, etc., were really expensive. But now we can do it on AI. So people have to do 2 or 3 jobs. They hustle. It's changed the structure of stuff, and technology will just keep looking for the cost and replacing it. It's relentless. It's the biggest observable trend is once you digitize things, the cost goes to zero in everything it touches.
Did you hear the recent speech? I think it was in the European Parliament. Oh God. I don't know exactly where it was. The speech was in English though. And they were saying basically that we want to degrowth. And they made it sound like this is going to be amazing, greatest thing ever, degrowth, less people on the planet, just all good, all good. But you're saying that's a bad assumption. So
no, the bad assumption is that it creates wage inflation. The degrowth, okay, degrowth at first creates more for less people. Okay, great. And if you can distribute that, great. The issue is, at the end of it, you end up with the robots and the AI because you are hyper incentivized to keep increasing productivity, that you are sowing the seeds of our own demise because of the economic engine is actually forcing you to take this incentive. It's kind of weird, but that's where it's going.
Woof. Okay.
Because the answer to this slow growth and this shrinking population is more productivity. The way of creating productivity is robots, AI, etc. The faster they grow, the more that we use them, the more that we need them because the population's smaller. This is why Elon Musk keeps saying, people don't understand this. He keeps saying shrinking population is bad. It's not bad for economic growth going down. It's bad because it incentivizes everybody to increase the workforce. So the population side of the equation can be offset by the machines. So look at an Amazon warehouse, perfect example. Amazon has gone from having 1.5 million people, about 1 million people working there and 0 robots, to 1 million people and 500,000 robots. The robots work 24/7, 365. They're more productive than humans in all aspects, and they just keep replacing humans.
Sorry, didn't you say that there's still a million humans working though? So it's just increased productivity through robots. So are you saying that that should be, to match their scale, it should be 1.5 million people?
Correct. So they're replacing the jobs that would have naturally been coming from humans. And this trend will accelerate until there is no need for humans because the machines will have taken over. This is Elon Musk's thing, is the more we try and make these machines more intelligent, the robots better. Elon's building this damn thing himself, right? Twitter is the training model for the AI that he's built, and he's got Dojo, one of the largest supercomputers at a focused task that's ever existed. It is the largest. And then he's got the Optimus robot. I mean, there's the end of humanity right there, because once the genie's out of a bottle. So that's why he's worried, and that's why, you need to pull the ripcord and piss off to Mars. It's not from anything else. It's the logical conclusion of economic forces creating more and more powerful intelligence that doesn't require humans.
Okay, now
that's what the singularity gets to.
Now I feel seen by you, because this is where I'm at. So then take us back to your early statement that you're optimistic about the exponential age, whereas what you just said is how I feel about the exponential age when I don't forcibly put my optimistic hat on. Because look, I ultimately default to optimism. I think it's a wiser place to be. I certainly think it's a more enjoyable place to be. And I think that people should find that path where they can explain things in a way that end well. And I thank you for letting me wear my more pessimistic hat, because I knew you were going to be in the more optimistic seat here. But why, when you look at exponential age, if you can see the economic forces will incentivize that path where, as population and demographics are destiny, they're in plain sight, everybody can see it. It is going to decline massively, at least temporarily. That is for sure. And so as the population begins to decline dramatically, as the economic forces push us to lean more into AI and robotics, and the guy closest to the problem is like, hey, PS, let's get to Mars. Where do you, like, what's the thing that has to go right? Or where do you think that either Elon or myself are looking at this wrong?
So you're confusing time horizons. A lot of people do this. A lot of people go, the dollar's going to collapse because it's so much in debt. Probably right. Is it going to happen this year, next year, or in 20 years' time? You can't worry about something that is 20 years out because the future paths are yet unknown, right? Because we're too far out. The event horizon is too far out to get high probability forecasting. So we have to make a huge bunch of assumptions. So let's go to the shorter time horizon. Are we likely to benefit from the ability to superpower human knowledge? Probably. Are we going to benefit from cheapening energy costs? Probably. Are we going to benefit from the things like self-driving cars, driving us to work, delivering packages, drones, all of the stuff? Are we going to benefit from the space technologies and Starlink? Are we going to benefit? Yes, yes, yes. Is the stock market going to go up if we invest in this stuff? Yes. Okay, so there's a lot of benefits that are being laid out for us all. Is longevity of life going to increase? Yes. Are we going to have massive breakthroughs in genetic sciences? Yes. Can we train AI models on cancer and all of this stuff? Yes. Right, okay. That to me sounds like a golden age. I call it the Renaissance. Or I'm English, so I call it the Renaissance. But after that, you get to what people refer to as the singularity, is where it becomes unforecastable. And this is what the debate is going on amongst Sam Altman, Emad Mostak, with Elon, Noah Harari, everybody, right? It's that moment. It's like, what the hell does that look like? Elon's like, I don't know, so let's just have a plan B. Makes sense? None of us really want to go to Mars, but I get it, right? If we completely screw this up, but I don't see how the virus of technology isn't like in 2001: A Space Odyssey. It just doesn't go with the ship, you know? So I'm not sure.
Yeah.
I don't know that. Are we able as humans, because we're such an adaptive cockroach of a species? Well, we haven't proven to be yet. We're still pretty young on the planet versus others. But let's assume we're like crocodiles and sharks and we can hang around for a few million years. Will we figure out an adaptive mechanism to deal with this? Maybe. That's the optimist outcome. Is like, oh no, we're humans, we're amazing, we'll figure this out. And the other one is, we're never going to be as smart as these machines, we're so totally fucked. I don't know, but I know that in my lifetime there's a 20 or 30 year period which might be a truly extraordinary moment in history. And the issue is we can't see through the other side of it, and that's terrifying. But I think we mentioned this last time we chatted. I don't have kids, so I have to worry about it less. People who do, I get it. I get it. It is an existential threat of which we cannot figure out how to stop it. And regulation, it's not going to stop it because the technology is out of the bottle. It's like you can't stamp crypto out because the technology is out of the bottle now and it's everywhere. And yes, OpenAI is the current leader with Microsoft, but all of the big US companies are incentivized to outcompete each other. And so they're incentivized to create more and more powerful models. But if they get regulated, well, somebody else will do it. This is the geezers you're talking about, or geysers, is they're popping up everywhere. But really what is happening is it's a massive bloody explosion that is unstoppable. So
talk to me about regulatory. So as somebody who doesn't live in the US, but you pay attention to the US, you probably have a much clearer picture than somebody like me, who's not only in the US, but I'm in California. How do you think this is all going to settle out? Is the US going to get left behind? Are we being too strict regulatorily? How does this play out?
I mean, this is an impossible choice, right? How do you regulate this thing? And how do you get a bunch of 75-year-old politicians to regulate this thing? I don't know. I don't think anybody knows. Oh, we're going to align the models with humanity. What does that even mean? Nobody even knows how to do that. For God's sake, we don't even understand how large language models learn. We don't even know what they know. All we know is, hey, we're figuring out different questions to ask it, and it seems to be able to answer them. But when you listen to Sam Altman, he's like, well, have we created, AGI? I don't know, he said. I don't think so. And Elon's like, well, it's 3 to 5 years away. It's unstoppable because of the profit motive.
Well, also what you're talking about earlier with the need for increased productivity. But if you were to map this onto the way that different geographies are responding to Bitcoin and crypto, which feel very similar to me, in terms of either you're embracing the new, where things are going, you're willing to face that the way that we're handling the financial system creates these incentives. And so you're either trying to capital control, lock people in, not let them leave the country, or certainly not let the capital leave the country. Or you're like, hey, you're using it as a way to get people to come to you.
This is a really important point, Tom. Why? Why do they want to stop you leaving? Because they want to mutualize the losses on you. If you leave to the other place, they're not mutualizing the losses on you because your crypto that's why the capital controls. It's like, don't leave our old system. It's like exactly what's happening with the regional banks. Please don't take your deposits out because they all go bust. Our participation in the fiat currency system is our deposit. And if we go, you're just left with leverage because it's the collateral of the system. This is why they don't want it to happen.
And how do you see the US? Do you think that we're being, because it feels very antagonistic to crypto at the federal level. You're getting some stuff happening at the state level, which is interesting.
So this is really important. So firstly, just on the AI versus crypto, very oppressive on crypto. The biggest AI companies in the world are US, so they're probably going to be a bit softer touch around that. And these guys are playing the usual trick of, we'll be good guys. You don't need to regulate us. We'll kind of do the right thing, right? Because there's too much money available in this equation. So crypto US, because the US citizens actually have a lot of capital restrictions. The land of the free is actually pretty unfree. People don't want to deal with US citizens in banks. So if you come to the Cayman Islands or the UK or Spain and you're a US citizen, you want to open a bank account, nobody wants to open a bank account, really. It's a pain because of the US reporting and the US state tentacles, its grip on the global financial system. It owns SWIFT payments, it owns everything, and it wants every US citizen to pay its taxes because the mother beast needs to feed the debt burden, right? So it's actually very restrictive. So it doesn't like you being able to opt out of the financial system. Okay, they want to make sure they get taxes. It's fine. You're a US citizen. But different countries have been more loose on it. I think Europe is going to freak out over AI more than the US is. But Europe's been actually better on crypto than the US has. Why? I don't know. But the crypto side of the equation is really important because I've lived this my entire life. Why is London such a big financial centre, considering it's a tiny little island in the middle of a really brown, muddy, cold sea? It's because it speaks English and it has a well-developed financial system and legal rule of law. But what really changed for London was the US coming off the gold standard back in 1971, 2, whatever it was. So that created something called the foreign exchange market, because before everything was pegged to gold. And now the pound and the dollar and the Deutschmark and the yen were all moving around independently. And the US had capital controls because it's got the global reserve currency. It's like, please don't mess around. We've just gone off and changed the global system. We need to be careful. Okay, I get it. Fine. So the UK said, well, all of these people we trade with, they need to get access to different currencies now. So the foreign exchange market started, largest market the world had ever seen. Then the US made another false step. So the banks started moving to London, right? Big, lucrative, massive market. Deepened the UK's trade linkages with everybody, financial trade linkages. Next thing happens is now everybody's trading around with currencies. The dollar is the middle currency, the reserve currency. And people want to borrow dollars. And the US is being restricted with its capital. So the UK says, forget it, we'll do it. It became what's known as the Eurodollar market, which is the overseas market for dollar borrowing and lending. That becomes we don't know the size of it, but let's call it a $400 trillion market.
Whoa.
And then the US, then we get this big breakthrough in derivatives. The US has got the Chicago Board of Trade doing futures and options and all of this stuff. But we start to figure out more complicated structures, things like swaps. And the US stops its banks doing it by its use of regulatory capital. They're like, no, this is inefficient. You can't do this. The UK and Europe went, well, we're going to regulate and allow it to happen because it's big. We've seen this before. That becomes a quadrillion-dollar market.
Jesus.
That's why every single bank from about 1985, well, particularly after the Big Bang in London. So let's call it from about 1990 to about 2008, 2010, all the major banks' largest operations were London. So Goldman Sachs' biggest operation, most profitable, London. Merrill Lynch, London. Merrill Lynch is different because it was a brokerage firm. But JP Morgan, they were all London. So London, if you've been watching the news, is going to do the same thing. It's called regulatory arbitrage. London is putting together a very sensible set of crypto rules, as has Europe, as has Switzerland, as has Singapore, as has Hong Kong, as has Australia. Okay, there's its old trading group that it did with Eurodollars and it did with derivatives and it did with foreign exchange, all got their regulations in place. The UK is the hub at the middle and it will capture the lion's share. And before you know it, Coinbase, Gemini, and everybody will move to London. There'll still be listed firms in the US, but they will move. And this is the issue with the AI and crypto. You can't shut it down. Because if it is productive and it has value and it has future expected value that's higher than today, it will go somewhere. And if we look at the crypto market now, it's $1 trillion. Okay, that's meaningful for the UK economy. Where is it going to go? Well, 10, 30, 50 trillion. Well, the UK wants that pie because it shot itself in the foot after Brexit. So the US can try and regulate it all it wants. It'll just move. It's like water. Decentralized networks and global finance and money is like water. It flows everywhere. And it's the same with this AI, which is why I don't think we can solve it with regulation. Because somebody's going to have the profit motive.
Yeah, it will go somewhere. That is for sure. Walk me through the reversal, the Chinese reversal on Bitcoin. So they had clamped down everywhere, including Hong Kong, but they've now opened up Hong Kong. That was startling to me.
Well, they've done this several times before.
But
they've done this several times before. Is at the wrong time they try and stop capital flight, because everybody knows that the Chinese have been using this to get money out of the China economy, which is what stablecoins are being used for as well, as has the global art market, there's a lot of things that the Chinese use to get money in and out of the system. So they tried to stop that when the US dollar is very strong. That's a start, because they can't lose control of their currency. It's a big fear of the Chinese. Additionally, the Chinese have moved towards a central bank digital currency, which is very useful for them, because once you do it, you can now take stock of the number of yuan in your system, because there's no cash. There still is, but what you're doing is you can then see where it goes. And so I think they did that. They got the size and scope of what their money supply really is. And now you can reopen it because you can now track it because it's all digital. Well, you couldn't track it easily before because you could hide it with bank payments, up, blah, blah, blah. But blockchain makes everything transparent, much to, you know, everybody's chagrin, because everyone thought it was a privacy thing. It's actually not in that kind of mechanism. And I also think this is more contentious, is that's the reason Binance survived everything, is the Chinese government wanted it to. Because that is the linkage between the fiat world and the crypto world. And they own the Chinese state essentially is a supporter of the largest crypto exchange in the world, because that is a potential bet on the future of the system of money. And it wants a say in that. And it makes total sense.
Where's Binance headquartered?
There isn't one.
Where does, oh God, what's his name?
CZ, Dubai.
Okay, yeah, I was going to say, I can't fathom that he's actually in China. Very interesting. So when you think about, sorry, go
and
ahead.
the US will probably support Coinbase in the end.
What?
Because everybody needs control of this situation. If not, the UK will take control of the entire money, the global world of new money. Or the digital system.
I hope you're right about that, but I don't see a single move on behalf of the U.S. government that would lead me to believe that unless they lose the Coinbase lawsuit, I think they're just going to.
Or we have a change of government.
Yeah, true.
Which is,
what do you think about 2024?
I don't know. We haven't yet seen the contenders. You know, everybody's got a bit too much hair on them still, so it doesn't feel like there's something obvious. But maybe there will be. Maybe something out of this. You know, I thought Frank Suarez, not because he's Francis Suarez, not because, you know, he's the pro-crypto guy, but he's young.
The mayor of Miami, right?
He's the mayor of Miami. He is centrist, essentially. You know, he's just that kind of person, younger, more dynamic. We need to find somebody of that. The US can't keep going down the same thing of baby boomers voting for baby boomers, voting for baby boomers, and trying to protect themselves. That has to be broken somehow. It broke in the UK. Look, Rishi Sunak, he's young. He's a centrist, young. Whether they keep him in or not, I don't vote in the UK anymore. But at least they're making progress, like crypto regulation and AI and technology and fintech, and because they've got a younger government. And we've seen that in, you know, France has done well because Macron is younger. You know, so we need that.
Yeah, that I will agree with. So since I'm wearing my my doomer hat today, I'll push on the geographical thing. So what it feels like here in the US is that things are really beginning to intentionally divide along geographical regions. And you're getting like this hunkering down into blue state, red state, people peeling off. If you're into crypto, you're either going to Texas or you're going to Miami. And seeing there's this whole new idea of make America states again, where people are saying, hey, we need to stop doing all of the regulation at the federal level. We need to start pushing this down to the state level, and letting the states compete for the residency effectively of the populace and let them begin to move. Now, I'm grateful as somebody that feels out of step with the federal government on my take on crypto. I'm certainly very excited that that is at least an option. But like your boy, Goldsmith, James
Goldsmith.
There we go. I would like to broadcast my dire warning. While there might be a part of that is good, that ends so badly because you end up fracturing, you end up pitting people against each other. It ends up, I think, becoming very problematic very fast.
I saw this in 2012 because of what happened in Europe, and I saw what was happening in the US. It's one of the reasons I bought and built a house in the Cayman Islands. I just thought I need a plan B. And the plan B needs to be somewhere where nobody cares about. But I can still live a high quality of life. It was a very purposeful decision knowing where the world was going to go because there was no solution. So the kind of realizations that you're having now, I had, it's more visceral for you now because you're just seeing another banking crisis. But we saw it in 2012. We saw really bad outcomes there. And I think the US one is still to grow. So it's just the delayed response of having it happen to you. The moment it does, it's like, okay, I get it now. So I did this, and I don't think that's going to go away. I'm hoping for a miracle.
What doesn't go away? Sorry.
Populism, anger, division, and a separation into smaller states. I actually spoke to an old client of mine, an old friend, who's one of the world's great macro thinkers, this Italian count, and he speaks very quietly. And I was telling him about this. I was like, I think Spain is going to splinter into countries. The UK is probably going to splinter. Scotland will probably separate, blah, blah, blah. And he said, listen, Raoul, the trend of the last 50 years was super states, the EU, the United States of America. He said, usually those things end up separating again. And if you think, he said, he was whatever he was, a count from an Italian, one of the Venetian states, these little small states. He said, the world does this, ebbs and flows, centralization, decentralization, right? It's very common. He said, it's not necessarily a bad thing. It's the getting there that could be troublesome. Depends how it happens. Don't forget, we disbanded the British Empire. That was gigantic. And yes, there was some pretty ugly stuff that happened, like, what happened in India when we kind of gave back the keys and everybody killed each other in the partitioning. It was ugly, but it did happen over time. So I don't know. I think the trend is not going to go away unless we somehow change this economic equation, because that's what's driving it.
Yeah.
It's the same equation that's driving it.
Yeah, very, very distressing. And I think, unfortunately, the pieces are already on the table in terms of how we could potentially change the economic system, which is effectively Bitcoin. You have to remove the ability to inflate. Once you take that away, though, there are also consequences on the other side. And so it is a very, it's a very tricky
Which is
time.
my argument has been, you can't do this at once. Anybody who does this wants the end of the world. It has to happen as a glide path. And over time, the crypto side of the equation, the new rails for the system, can experiment, get itself sorted out, figured out, and then we can go. So I spoke to the Department of Defense about this in 2014, 13. And I said, they periodically, reach out to people like me, thinkers about stuff who are looking at crises and stuff like that, because their job is to assess risk. And I was talking to them about it, and I said, obviously, he said, we're worried about debt, we're worried about the system blowing up. I said, yes, obviously, everybody is, because that's one of the things they need to game out. What happens if the West loses control of money and debt and everything else? And I said, well, I think the answer's there, and I think it's Bitcoin. And he said, yeah, well, tell me more. I said, and I think the US government and the UK government invented it, which is the NSA and the GCHQ in the UK, who are the two world centers of cryptography. Because even how the white paper's written, it's
you think they're
transatlantic. Yes. I always have. And I asked the Department of Defense. They said, "Yeah, we've considered that too." That they seeded.
Do you think it was official, or it was just people from that went rogue?
I don't think it's necessarily a rogueness. I think like Google have, like Google X, where they do tons of experiments. Right? They know that one of the esoteric risks for the entire Western system is the issue of money. So there's probably groups of people who are given things to try. And if you can seed a new system, maybe they tried 100 of these and just one succeeded. We don't know. But it would make sense because that's what they do, this kind of stuff. So one of these took off. And so I think it's always been. I don't think it's a coincidence it came out of the financial crisis. I don't think it's a coincidence that the halving cycle and all of this is all related. it is the solution. Always has been the solution. You just can't go there tomorrow. So all you need to do is let it happen slowly and manage that transition. You'll be okay. There'll be times where it speeds up because we've got something bad going on, and there's times when it slows down. But and that's what I think the US government regulation is trying to do. They don't want to ban crypto. Just slow this down. Because if all the deposits leave the banking system, it's game over. If they don't set up a way of collecting taxes because everybody's living in crypto land and they have to ask your honesty in what trades you've done, that's not going to work for them because they can't pay the bills. So I think they're trying to catch up. I think that the UK will have a CBDC. I think the Europeans will. It's all coming relatively soon, next 5 years, 3 years, 4 years. And they'll feel more in control of the system that they've got because they need to pay the interest payments. Because if not, and the benefits, the aging benefits, all of this, Social Security is a problem with such an old population.
So speaking of managing this transition well, how bad do you think the banking crisis gets before it stabilizes?
So feels that we're in the kind of summer phase of, we know it's bad, but nothing extra is happening. But meanwhile, the deposits keep leaving the system because the Fed are whistling past the graveyard going, la, 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 I can't hear you. The problem is interest rates are too damn high, which is the same problem I said. They need basically to go back to zero again. And it's leaving the system. So there's two phases of this. One is the banks will start getting worse again. We'll see use the KRE ETF, which is the regional bank ETF. It's easy. You can look at that, get it on Yahoo Finance, wherever. You see the price of it going down. That's telling you it's kicking off again. And the outcome will be to keep bailing out these banks, whether they force them into mergers, which was how the banking crisis in 2008 started. And then eventually it's like, shit, we need to give money and sort this out. So we will see that. We know that the banking system can't go to a full-blown reset because we've already had that. I think it'll bring down one of the big banks before it gets really serious. And which one is that? I don't know. Bank of America, something like that. That share price doesn't look great, the structure of it. But in the end, the Federal Reserve will come with their magic illusion bullet, the magic money. And that magic money will solve all of this, and we will all get mutualized because the asset prices will go up and we won't own enough of them and we will get poorer. So that is coming. The commercial real estate, so the quick one is the deposit flight. The Fed need to cut rates. The yield curve, which is the value of money in the future, of interest rates in the future, has to be higher than currently. It's the opposite right now. So that needs to happen. And then in 2024 and 2025, it'll all be about the commercial real estate. Because all of these, like Real Vision has offices in New York for 65 people and 3 people go to the office. The moment we can get out of our lease, we'll get out of our lease, as is everybody. And all of this stuff's going to be empty. So I think that will all end up on the Fed balance sheet. So the banking crisis will continue. It'll make it harder for the average person to get a loan. And the Federal Reserve will see this as the economy goes into recession, and eventually they'll start cutting rates, and eventually the more cowbell comes back. And as I like to say, it is written. We kind of know. There's no other outcome.
As we go deeper into recession. So if we're already in recession, all that happens, we go deeper into recession. It's already written. We know the outcome. Yeah, I mean, Jesus. Heavy. Okay, so I want to go back to CBDCs. I've heard you say, if I'm not misquoting, that you have a contrarian position here, that you think maybe they're not all bad.
They're not all bad because, firstly, I do not buy the argument that, well, they've got control over your money if you do this. You're signing over to the devil. I'm like, you guys signed over to the devil by having a bank account. All of your funds are available. And if you're telling me, oh, well, they're going to force us not to use cash, and you're telling me you're using cash for anything apart from tipping the valet guy at the restaurant and buying weed, you're lying. Nobody uses cash. Nobody uses cash.
Everybody I don't use cash for my weed, Raoul. I live in California.
No, exactly. So nobody uses cash. So it's a lie. And so they're using their credit cards, they're using their PayPal or their Venmo, They're then on social media. They've got Google. Everything is accessible by the government. That your privacy was the story 30 years ago, not today. Maybe it's gone. So a CBDC means that the government can become more, well, they can even stop money now. You've seen it. You're the Russian, suddenly you don't have the money, right? So all of that is always still there now. So yes, they can penalize you, but I also think you can do good with it. So I think there's a load of bad outcomes and governments will abuse it. Fact. I also think there's some really amazing outcomes for economics.
How so? I've heard you say that, but I don't understand how that would work.
I think, so let's say you have Hurricane Katrina. Devastating. People aren't insured. It's a catastrophe. So how it happens now is the federal government makes a payment to Louisiana and blah, blah, blah. And there's all these middlemen and everybody grabs its stuff and it doesn't get to the people. You could give 3 million people in New Orleans instant payment in seconds. You cannot give economic stimulus to wealthy people. You can give it to poor people. You can penalize people who have excess savings versus the people who don't have enough savings. So you can give poorer people a 15% interest rate to lend at, i.e. to get on deposit. Okay, that's interesting. And maybe they can borrow money at one price versus another. You can do a lot of behavioral economics and changing the system. And behavioral economics, everyone's like, well, that's the Chinese government. They've got spy cameras everywhere. I mean, look, the US government knows everything what you do. I mean, every time I come into the country, I just stare at the global entry, recognizes my face. I don't even show my passport to anybody. I'm into the country. I'm then into an Uber. Everyone knows where I'm going. My Apple Maps clocks me. I mean, look, forget about it. All the governments are the same. So I just think, economically speaking, we could do interesting things. We don't have to be so Luddite about how we use fiscal stimulus, and that we can create.
We can create
incentives, good incentives, if dealt with well.
If dealt with well, yes. You said something. All governments are the same. That I violently disagree with. What?
No, it's just a meme. It's just a meme. You're all what governments stand for. We stand for freedom. We stand for that. It's all a meme. They're all the same. They all control their people in a certain way and dress it up in a different manner. One says we're protecting you. The one says the enemy's outside. The others, they're all the same. Then how do you hold a society of large numbers of people together? You create different ways of doing it. And it pisses me off when people say us good, them bad. By whose judgment? What, because 1.4 billion people in China live their life differently than the 350 million Americans? They're bad, we're good because they don't follow our system. That's insanity. And Americans would suggest that they're pressed up against the window, desperate to get out of China because they hate it. Go there, they don't hate it. Why would the Japanese want such a regulated society? Because it works for them. So we just have to drop our own lens of who is good and who is bad. And I've traveled to, 120 countries. I've lived in several. I'm just very open-minded about different people choose different systems that suits them. But most governments in the end try to help their people, but will also abuse them in the process. And it's just different ways.
It's interesting. So I don't know that I disagree with that at a very high level, in that everybody is doing something, you didn't say nefarious, but I will say nefarious. And it just comes down to the flavor of
that's power, activity. Right? Power is just different flavors of power.
Yes. However, having read a trilogy of books that I will recommend to anybody, the specifics of how different moments in different societies will rear the dangerous head, it does seem to me that you want to imbue the populace with a certain mentality that will keep the government in check. And so I think the thing I'm pushing back on are the moments where the humans, because ultimately all of us could rise up and stop our governments. But when you look at Mao's China or Hitler's Germany or Stalin and Lenin's Russia, they are terrifying to a level that I don't think modern people have availed themselves of to realize how wrong this can go. And so when I look at the CBDCs, I don't have a lot of wisdom here. I want to be very clear that I'm now thinking through something out loud for the first time. But reading The Red Famine, for instance, which is not part of the trilogy of books, just because I alluded to it, I'll say it. Gulag Archipelago, which is about Stalin's Russia. The Rise and Fall of the Third Reich, which is about Hitler's Germany. And Mao, The Untold Story, which is about Mao's China. They all illustrate a level of human evil that is just unimaginable. Then there's a fourth book, which is The Red Famine, which is about the Ukraine in the 1920s, if I remember correctly, when they went in to the Ukrainian farmers and said, all of you kulaks who are basically, you're outproducing other farmers and therefore you must be stealing from people. And so they killed, imprisoned them, all this stuff. And because you just killed your best farmers, basically all of the farmers start starving to death because the government is just seizing all of their grain. And so you kill the best and then you seize everything from everybody. And there is a moment in the book where a woman eats her own 7-year-old daughter. And I was like, I'm out. Like it is, things can go so wrong. And I worry that we've had such a period of stability that we forget that there is this darkness that is present in the human animal. As Solzhenitsyn said, the guy that wrote the Gulag Archipelago, who by the way was in the gulags, he said the line between good and evil runs through the center of every human heart. And so I worry that we have to eternally protect ourselves from how wrong things can go. And so I do look at a CBDC with a little bit of hesitation. As you map it out and say, I'm already doing everything, I had to laugh out of anxiety because you're right. I don't use cash for anything. So 100%. And when I saw what happened,
it's not a big change to you. I think you're fearing the wrong thing. I think the fear is right.
What do you say? What you think I'm fearing?
Central bank digital currencies, I think, are a distraction. What is actually happening is you've already got capital controls in the United States. It's hard for a US citizen to move the money around. You can't even get rid of your damn passport. You're stuck in your state. You can't even leave your state. You pay tax everywhere in the world. Nobody else does. I think there's 3 countries in the world that pay tax, that force their citizens to pay tax if they live outside of their country. I don't know what it is, but I would fear the US going to war with China. It's fine to be at economic war. It's fine to be very cautious of another rising power. But if they go to war, the outcome is terrible. That is a much bigger risk than a central bank digital currency. It is, as you said, there's something goes wrong with power that can lead to these outcomes when humans overextend it. And hubris is one of the risks. And that power to control the world, that to me is a bigger risk. There may be another risk. The enemy within, i.e. the country collapses on itself, can happen too. There's a number of ways your leaders can let you down. And you should always be vigilant. So I do agree, but I think the CBDC war was lost a long time ago. The privacy from your government war is not going away because of technology. Because Elon Musk has got, he's putting 40,000 satellites in the sky. Every GPS can see you and everything. So that all went. So you just need to make sure your government is not going to abuse that, because that's when it gets really bad.
Yeah, that's actually
my bigger
makes
fear.
A lot of sense.
It's abuse of power, not monetary abuse as much as raw abuse of power. My biggest existential threat is do not go to war with China, because that was the outcome for Hitler. for the economic collapse. There are reasons people go to war, and the outcome and the end result is not good. So I'd be worried about more of that stuff. But the US is kind of warmongering like crazy right now, rattling its saber. It's like
against China or in the Ukraine?
It's against China. And it's okay to not like China's system because it's different to your own. It's okay to feel threatened because China has economic power increasing and that's threatening your system. That's all okay. Just don't go too far.
Yeah, it's interesting. The thing that
it's like you can have a bar fight, but if you pull out a gun, you're fucking stupid. And it's not because US wins or loses, it's because everybody loses.
Yeah, I think the thing that I fear more, so I think it was 70 million people died in World War II. It's certainly not more than that. So let's say 70 million. Mao's China killed over 100 million. Look, estimates vary, but that seems pretty plausible. Yeah, it is. That worries me. So my thesis was, because I very much agree with you, that the capital controls isn't the thing. I'm not specifically saying capital controls is the thing I fear. What I'm saying is I think that you want the populace to have a healthy skepticism when the government wants more control, because the government taking more and more and more and more and more control ends up in a really dark place. And so my thesis around that, and going back to what started this whole conversation, is the reason that I got into finance content in the first place is it was me trying to understand how the world actually works. And this is why, and I'm sure it drives my audience crazy sometimes, why I will circle around a single point until I really understand it. Because if I can understand its nature, then I know how to protect myself. I can do novel things. In fact, everybody listening, please hear me when I say, you can only follow until you understand something's nature, because you're following people that do understand the essence of that thing. But once I understand the essence of money, and this is why your everything code is so important to me and it hit me so hard, is it gives me a framework with which I can understand the entire system. And so instead of looking at one thing, I'm looking at the entire system. So as I say, to be somewhat skeptical of the government taking more and more power is to understand the essence of government, is that it will continue to ratchet up. It will continue to seek more power. It is part of its essence. And so when you look at the US experiment, which I think is the right way to look at it, it was an experiment in how do we put the power in the hands of the people as much as humanly possible? How do we recognize that people tend towards tyranny? How do we put systems in place that basically trend towards stalemate instead of trending towards rapid change? Because read The Rise and Fall of the Third Reich. It is one of the most startling books I've ever read in my life. As the guy's going through it and he's talking to people about Hitler was able to talk what's now the Czech Republic. I forget the original name.
Czechoslovakia.
Czechoslovakia. Thank you. He was able to talk them out of their country, dude. There was not a single shot fired. He got them to sign over their country. And I'm just like, God damn. Like the way that he just slowly eroded the country until he was made Führer and was like, nobody can challenge my power now. It is crazy. And when you watch it step by step unfolding, it's just like, hey, somebody needs to check this power. Now, the fact that Hitler came up earlier in this conversation because of monetary sanctions, and that this all, to your point about the everything code, it all comes back to a debt cycle, which is crazy. But as you begin to understand how all of this, how even the debt cycle is just a response to human nature. And so now it's like, okay, as you begin to understand the essence of things, now you can understand what to be wary of. So I concede the point that overly focusing on a CBDC isn't the right move because I've already given up all those capital controls and all that. What I want to remind myself to be aware of and other people is that, man, unchecked grabs for power, they end badly every single time. And they can be even more catastrophic than a world war. So one needs to be
let's
careful.
Just come full circle again, just to tie up all of these loose ends. When things are bad and people are angry, governments get more extreme. We've seen this, right? the volatility of government, it's gone more left, more right. And I think they do more bad things. The left becomes overly restrictive, too much regulation, too much. The right does other things, and it's just not good. And if you carry on like this and economic growth continues to slow, you will have war. Whether it's civil war or state-sponsored war, you will. So this is why you need to have this productivity miracle. There is no other outcome. And I know people get pissed about what the Europeans are doing with forcing ESG, the green energy side of the equation. They're not stupid. They know what they have to do. So you have to change the energy side. The US is not that keen on it. There's two sides here, because the US is the largest supplier of oil to the largest, has the most amount of oil in the world. So it wants to keep hold of that system, but also this new system for the productivity. That has to happen. If not, you will get down to your danger zone. Because in boom times, nobody goes to war.
What do you think about as they go to ESG though? Because I get that, and I've heard you say something which I think is really smart, which is America is energy independent. So of course they're not as worried as switching over to renewables, whereas Europe is not. And so for them, it really becomes a far more important issue. My beef, and again, I would like to acknowledge this is not an area I've thought a lot about, but I've thought about it enough to, this is how I'm looking at it. I love the idea of going to renewables, but the way that we're doing it, the speed, to your point about sometimes you just need to slow things down, the speed at which you're trying to make a change necessitates, from what I can tell, getting into nuclear energy. And the fact that they're eschewing that becomes problematic when you look at whether you're trying to enforce this globally. Did you hear Konstantin Kissin's whole Oxford debate on this topic?
No.
He's basically like, look, England, I think was what he was talking specifically, accounts for like 4% of carbon emissions. So it's like, even if they drop to zero, it has absolutely no impact. So this really becomes a question about wealth accumulation. And so you have to understand how it impacts the poorest countries. You are never going to get the poorest countries to say, okay, we don't care about energy. We'll just stay poor and we'll keep burning wood inside of our huts, and people are dying from inhaling the smoke from that. Whereas if the approach were, okay, cool, we can't screw over the poor. We need to transition as quickly as we can. We need to not have a sort of philosophical, we draw a line against something like nuclear energy. We need updates. It needs to be better, all of that. But the not being able to debate it feels like the problem versus we want to go ESG. So right idea, wrong execution.
Nuclear's coming. It's coming. I mean, Finland's already just started. It'll all come because there's no way of solving the equation. But they do need to already try and get the reliance of fossil fuels down. Nuclear power plants take time to build. It will come. So I don't worry about that. It's how fast this happens. Europe's going fast. There's an argument from people in the commodities markets is it's going to happen too fast. Therefore, there's going to be a massive supply shock because there's not enough oil around, and because you're stopping people doing it. That's yet to be proven. Oil will go up, as will copper, in the next economic upcycle, because it always does, because it's cyclical. Will it go to some super cycle that people talk about? I don't know, yet to be proven. But I think it's the right thing to do to move as fast as possible. I also think it's the right thing to do to move towards nuclear. There's new sources of nuclear, are much smaller, much more interested. And when you get actually further down the understanding of nuclear, you're now getting small nuclear, that you could have cars running from nuclear, you could have your house running from nuclear, and you can have a decentralized grid. Okay, that's very powerful, to have a decentralized grid where you're generating your own power. All of that technology is possible. It's not scaled, it's not finalized, but it's possible. So, where is the world going in 20 years' time? It's going towards a more decentralized grid. Europe, decentralized grid, all the green energy stuff. Decentralization of the grid is a good thing. It's much more robust because it can't be struck by another sovereign state. Now, these are fragilities. I mean, we talk about this, the hacking of the US power infrastructure, because it's so out of date that the Russians or whoever it is could bring it down. We need to decentralize. So there's stuff we need to do. We've got different threats than we ever knew what to deal with. I mean, that cyber threat, that's another whole conversation to have. But read a book called This Is How They Tell You the World Will End by a New York Times journalist about cyber. It's mind-blowing. It's terrifying. Yeah, we're kind of worried about the wrong energy. We're worried about the wrong enemy half the time. Who knows? In a digital world, we have very different enemies.
All right, we've talked today about 2 life rafts that I think are really potent that will help us escape this cycle. Technology, we talked about a lot, and then crypto. There's one thing on crypto that maybe Web3 is a better way to categorize this that I want to talk about, which is tied to this idea that I mentioned earlier that I wanted to get to, which is why the 80s felt so awesome. I was too young to really be aware of what's happening. I know you've looked at that. So I'm curious, is it accurate to say that the boom in the 80s, while I think ultimately problematic, was the financialization of everything? And am I right to draw a parallel? And this is one thing that, and again, I am the most ardent Web3 person you can imagine, but I also like looking at the potential downsides. I do worry about the financialization of everything via Web3. So walk us through the 80s. Is that characterization accurate? And are we just going to see the same problem with Web3?
So firstly, the 80s was kicked off by a collapse in interest rates and an end of that inflation beast driven by demographics. So it automatically felt better. There was an era of deregulation, which was the Reagan-Thatcher years. But we started a massive, monumental debt cycle. And I think it was Margaret Thatcher that started it personally, because she did something magical. And this is politicians and their abuse of power. And this is, as ever, probably an unintended consequence. They're good ideas and bad ideas. Nobody knows the outcomes. So in the UK, what you would call housing projects in the United States are called council houses. And council houses were free accommodation for people who didn't have the means to buy accommodation. And so it was easy to live there. The government gave it out. It was part of the structure of the post-World War II, repairing a broken society. And then Margaret Thatcher came along and said, well, these people should have economic participation, much like we're talking about with crypto. You can participate in the growth of the economy, not get left behind. Very good. Well said, Margaret. Her idea is we'll sell them the housing for cheap so that they're in, because they become conservative voters. The probability of being a conservative voter, if you're a house owner versus a non-house owner, were massive at the time. So she's winning votes. But actually, give people economic participation. Great. So they get the council houses, but they all become debtors. These are creditors, these people. Didn't have debts. They don't get mortgages. Turned millions of people into debtors overnight. And then so the hamster wheel starts of debt, and they start building up debt. And the US deregulated a lot of stuff at the same time based around Margaret Thatcher's ideals. And so this was where, if you can think about it, the 80s, so the average baby boomer is now 30, 35 years old. They're into the workforce. The inflation is behind them now. Interest rates are coming lower. Their wages don't go up. So what do? Is like, let's borrow some money. Interest rates have gone down. And that massive debt cycle starts. So the 80s felt great because everyone had money that wasn't real. And that's why the financial system got ahead of itself. 87 crash was part of that. And then it just took off again because the answer to the financial system getting ahead of itself was to cut interest rates and allow even more financialization. So I've argued, like you, that humans are humans and we will create leverage in every system that we do. And we will create leverage within, and we've done it already and blown up in the crypto markets. So you create some fragilities that exist in the financial system. Everything is financialized, i.e. the tokenization of everything via Web3. I think everything has value anyway. We're just bring it to exchange. Does it become a crazy boom bust wild west world of degenerate gamblers? Probably, because that's what humans are. But also, but the stock market's the same, right? Why restrict one market versus the other? Why restrict the market for, all goods and services have a price? So I think price discovery works, everything else. I think the reason price discovery doesn't work in crypto so well, or it becomes so boom bust, is because it's still restricted. It's small. It's just a small market. So too much capital in a small market, in and out, creates outsized outcomes. Market's bigger. So if you put $1 trillion into crypto, it would more than double, because of, even though the size of crypto is $1 trillion, is because everyone's holding stuff, there's not enough liquidity, and before you know it, it's a huge price. Put $1 trillion into the US stock market, might go up 20%, 50%. What's the crypto market go up with $1 trillion? I don't know, 100x. So it's just a function of that. And I do think the ability to freely access capital within the Web3 world is a game changer for people. Capital is restricted right now. I've got to remember that. And we're seeing the ugliness of meme coins and scams and crappy NFT stuff. We're seeing the ugly side of it. But free access to capital? I haven't seen that before. You need to be a regulated type of investor. You don't get access to capital. The system is against you. So I think access to capital is a very, very powerful thing that can happen through Web3.
Do you think that people will just get savvier? Because what's happened so far is you've had some really amazing, legitimate things happen, and then you've had some super rapid scams. I mean, there was at one point the NFT thing where the guy, what'd he say? Like, later fools or later, oh God, I forget what the meme was, but later nerds or something like that. And so he literally just took people's money and then was like, bye. So you have two paths before three: make it illegal, regulate it, or expect people to get smarter. Which do you think happens, or some combination thereof?
So have you ever had any friend or anybody you've come across take money from you and never return it?
Yes.
Yes. Is that regulated?
No.
Is you lending your uncle money because he wants to buy a car? Is that regulated or unregulated?
It's unregulated, but it is taxed. Like, I have to declare it.
Yeah, so you should declare crypto. But are you able to go and, if you're a 21-year-old, are you able to take your entire paycheck to a casino and blow it in one go? Yes. So why the hell should access to capital to grow businesses and do stuff be regulated in this same way? I don't understand the logic. It is protective of the system. It is not protective of the people.
You don't think
we
it's a
can
nanny
all
state
lose
thing?
money. Sorry?
It feels to me like a nanny state thing. So even gambling, you can only do it in the US. You can only do it in certain areas. You can't just gamble blanketly.
Yeah, but you can go to Vegas, do what the fuck you want with as much money as you want, and nobody can ask a damn question. But hey, you want to go to Coinbase and buy, some token that's not listed in, you're in trouble, or you're not allowed to do it. So why one thing and not the other? And I think it's because access to capital makes some people extremely rich. And to be the tap provider to the capital, which is the banking system, you get to have the capital and you don't. Or a VC or a private equity firm. You get it, you don't. Why don't you get it? Because I don't like you. That's not right. But in every other economic transaction, a private transaction, there is no protection outside of a contract. So if you give it to your uncle and you get him to sign a piece of paper to say, I will promise to pay you back, okay, you've now got a contract. So as long as there's some contract, some general ground for how we can interact with each other, that's okay. But to say good, bad, Vegas good, capital markets bad, it's just, I think that's an abuse of power. And it's abuse of power, particularly in the US, because of the system of money and power and the lobby groups. Who pays for power in the US is not like Europe. It doesn't happen in Europe in the same way. It's always shocks everybody, the US political system and how it's driven by money. The food outcomes, medicine outcomes, everything is driven by these superpowers, the corporations.
How's it kept out of Europe? You just can't make donations. You can't lobby.
Yeah, we just don't have such. I don't know the exact structure, but I don't think you can actually run elections based on money. So it just doesn't work in the same way where you can raise a super PAC with $1 gazillion and therefore you can do that. And by the way, I'll buy those votes. Yes, of course, there's horse trading and vested interests, and there is no perfection in any politics. It all stinks, but it's just not as abused.
Okay, so let's play out the scenario. So if you were to let people, and I don't know if you're saying truly unregulated, but if you let Web3 go without putting in the kind of regulation that we see around equities now, what do you think happens? Do you think we have like a 5 or 10 year period where a ton of people get burned, and then people begin to get they right size, they get skeptical, and it sort of comes out in the wash as people self-educate? Or do you think that it will just be a flywheel for abuse?
Yeah, look, I'm a believer in regulation. I just believe that don't excessively regulate that gives outcomes that are unfair on others. So I think there's regulation. I don't think there's an issue with a KYC, AML element to stuff. I don't think there's an element for prosecuting fraud. I don't think there's an issue with that. You just need to define what the rule book is. It shouldn't be all that bad, all this good. It should be, is what contract is enforceable here? Is it a societal contract or is it a physical contract? If somebody steals money from you, should they be prosecuted? Yes. Should you say everybody who uses this system is doing so illegally? That is wrong. So I do believe in regulation. I just think I just like a more pragmatic approach to life in general. I think just being a pragmatist helps, and don't be an idealist or an ideologue. Just be practical and pragmatic, and solutions are much easier than people expect. People tie themselves to ideologies too much, and I think ideologies are dangerous.
Preach, brother.
It's all right
preach.
to have a general ideology is fine, but imposing your ideology on others, not fine.
All right, brother. As always, this is amazing. I know you have a new event going on. Tell people about it.
Yeah, look, if you want to know more about AI, I mean, Real Vision is an amazing resource for everything, all of these kind of conversations. But we have a specific kind of festival of learning about AI, and it's free. So just use realvision.com/Tom. Use that, get your free trial. And I don't know when the festival of learning starts, next week, the week after.
All right, everybody. Thank you so much for joining us. If you haven't already, be sure to subscribe. And until next time, my friends, be legendary. Take care. Peace. If you want to learn why crypto is the future, check out this episode with Michael Saylor.
Bitcoin's the best performing asset for the past decade, and it's 100x better than gold, and it's 10x better than equity portfolios. So the volatility is the price you pay.